Hi team, Uwe Jacobs, Property Strategist from Property Friends with our monthly update, including the RBA decision. So let's go into the general stuff first. Well, the big news, I guess, is that the population immigration figure has gone to a forecasted figure of 400,000 immigrants this year. And that's not even going to make a dent into what the bottleneck is, what the shortcomings are from the previous years. We desperately need people. And a lot of those will be students as well, which is meaning that there will be quite a bit of money coming into the economy. Our universities are starving for some income. That's just cold hard fact. Now, on top of that, we have a generally 1% vacancy rate, which is already tight as drum. And it's not rocket science to forecast what's going to happen. The rental situation is going to get even more tight. It's going to be even higher rental rates that will be asked. There will be multiple people applying for properties and so on and so forth. Now, what I find interesting is that according to the Core Logic Australian housing values, it looks like we've bottomed out. We have, according to them, they have posted the second consecutive monthly rise. Their National Home Value Index increased by 0.5% in April, following 0.6% lift in March. So that means in rough terms that we're about 1% higher over the past 3 months. Both Sydney and Melbourne are on the rise again. But here's the point. The ripples are still going out from the previous capital gains in the major cities out to the country areas. Now, the big thing is in the country areas, larger country areas, there is much better rental yield. And they're still experiencing the capital growth that came through the capital cities up to last year. You see, it's all about balance. We need the yield and the growth to have the sustainable portfolio to make it work in the long run without, as I call it, having to feed the dragon, i.e. have a huge negative gear. And this is where Cairns and Townsville in Queensland, far north Queensland, are just shining. When you look at 5.5% rental yield and good expectation of capital growth, what can be better than that? Hobart is another case in point. I forecast that there will be further increases in value in Hobart too. So book a discovery call if you want to know any more on that or discuss anything. Link is at the bottom of our website, propertyfriends.com.au. Now, here comes the cracker, the RBA rate decision. We were on 3.6%, and 100% of the so-called experts on the target rate tracker forecasted no change. Personally, I was in that camp too. I said, surely they're not going to increase by another 25 basis points. And they did. So we have received an increase of 0.25% to 3.85% benchmark rate. The biggest reason for that was that the inflation rate at 7% is deemed to be too high. In my view, a big challenge, because the full effect of the increased mortgages and people coming off fixed rates in their mortgages hasn't been felt yet. The disposable income has plummeted and is going to plummet further. So the controversy in that is that some banks are already feeling the pinch and are reducing their previously increased rates. So the biggest challenge I have, in as much that the full effects of these large increases hasn't filtered through yet. definitely not through the stats. And disposable spending is way down. So I find it very hard to see how there can be any further interest rate rises, but I have been wrong before, just as I have this month. So that's very, very interesting. Only time can tell, but there you go. That's my prediction. No more increases from here on in. Personally, I think this one was over the top, but that's just the way it goes. All right, so that's the summary from me for the month. Enjoy, and remember, you gotta be in it to win it. Have a good one. Bye-bye.